HTJ.tax, the international tax firm for 6, 7, and 8-figure investors and entrepreneurs who are living that international life. Are you ready?
So I have an electric scooter company I'm launching in Bermuda. My app developer said that due to technical reasons, I can't use a local remittance provider in my country for payment processing. Instead, I have to go through Stripe Atlas, which requires me to set up a Delaware company. I'm doing that. So given the option of doing an LLC or C Corp, which would be better for me? Also, what taxes will I have to comply with or pay, as I'm not American? And the only thing I'm doing is processing payments with this US company. My thought process is to charge a management fee or IP licensing usage fee from the Bermuda company to the Delaware company and charge 99% or 100% fee on their earnings. What are my options or best advice that you have to legally avoid and minimize taxes due? That's a tricky one. If it is, you said that you're not American, and assuming that you have no US nexus and you just want US payment processing in this scenario, I don't necessarily see any US tax consequences, assuming that you open a bank account as well. Then if it is, you have a balance and there's interest earned on the account, that interest will be subject to a 30% FBAP withholding. So it'll be subject to withholding. That's the US tax consequence there. So from a purely US perspective, just opening an LLC for the purpose of payment processing shouldn't trigger any tax consequences. But I think you'd want to have, again, sit down with a tax professional, because you'd need to consider the Bermuda perspective. And then you've asked whether in the US it'll be an LLC or C Corp. Again, that depends. So we've had clients that have gone through similar situations. Now, it's not typically, I don't know you're using Stripe. Sometimes the payment processor may require that there be a US person. If it's a foreign company, our experience is that they may require that you onboard a US citizen or resident. So basically someone who's tax resident in the US to act as the responsible person. So I don't know whether that's the case in your scenario. So if that, but we've seen it happen with other clients, if that is the case, then it gets a bit complicated and the structure needs to be really well thought out. But on the surface, based on the limited information that you shared, I don't see any US tax consequences. But I think a proper sit down with a tax team may be necessary, because you want to consider the cross-border effect. Putting IP, once IP is introduced, that creates a layer of complexity. So if you put IP in the US, definitely there's going to be a consequence to that, because you have royalties. It needs to be valued. You'll have a transfer pricing agreement because it's a related party transaction. The royalty will be subject to FDAP withholding. FDAP is fixed, determinable, annual, and periodic. So it's basically a withholding tax on money that leaves the US to go to a foreign person, legal or natural. So it gets a bit complicated. You're better off sitting with someone and getting proper advice. But on the surface, based on what you've described, I don't see any US tax consequence.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.